Hello, everybody. Hope you're having a great weekend. Hope you're ready for another great week on the stock market. Last week was a week, and what a week it was. Apple led the charge with 4% increases. Tesla was very volatile. We had a lot of selling due to Elon selling some of his shares, but it made a comeback and ended up 4% up for the week. Closing at the 900 mark, which is very impressive. Google was up 3.75. Microsoft was up 3.18. The financials struggled a little bit. Energy had good weeks, but it flatlined half the week. I did hear a lot of comments about how bullish we were and how unsustainable the market was. And you know, I want to be honest with you and tell you that we really weren't that bullish. We crossed over the 50% retracement line, which is fantastic. Again, I've said it before. You guys heard me on the Discord saying we have never crossed over the 50% retracement line on the S&P 500 and made a new low of year on bear market years. That's fact. I had somebody question me on that. I went back and back tested every single year on every single bear market since 1957, and not a single time when there's a 50% retracement has the S&P 500 gone over the 50% retracement line and made a new low of year that same year. It hasn't happened. Somebody even sent me a message saying that it happened in 2000. It didn't happen. Let me show you. In 2000, we had a high of 153.79, and then it did make a low right here. It made a low at 126, and it came back up to the 50% retracement line, but it never closed over the 50% retracement line. It touched it intraday and closed below it. It never closed over it, and then we made new lows of year. Again, my theory is correct. We never have closed over the 50% retracement line and made a new low of year. Go back and back test every single year. If you find a year that I'm wrong in, please tell me. I do very thorough research. I back tested every single year all the way back to 1957. It hasn't happened. Now closing over the 50% retracement line, does that mean we're all-time highs are next? No, it doesn't. And what happened is, you know, we have this movement and there is retracement right here. In the month of August, we've had 10 trading days. 6 of those trading days have been red days. Only 4 of the 6 have been green days. But like I told you guys before, when there's a bear market, green days are bigger than red days. When there's a bull market, red days are bigger than green days. Now we are back into a bull market. Crossing that 50% retracement in my mind puts us back into a bull market. But it does not mean that there will be no more retracements. It does not mean that. There is a very strong bear case right now for retracement. The bears are mad right now. My God, are the bears mad. I've been getting so many messages from people that are bears telling me that how dumb the bulls are and how we're going to get rejected off this 50% line. And you know, we could get rejected, but I am confident right now that we are not going to make a new low of year. Is the rest of August going to be strong? Not likely. Is September and October, the traditionally worst months, going to be strong? Not likely. But I don't think we're going to make a new low of year anymore. So I'm going to switch over to the season axe real quick and just showing you this is the average of all the years with nothing left out. That's just the way the stock market looks when you average out the last 29 years. 29 years right there. Okay. Now when you go midterm election years, you can see that we struggle on midterm election years. We make a July low, and then typically we go up in August, and then struggle in September, and then make a new low in October, or test the lows in October. Is that out of the question? No, that's not out of the question. We could still test the lows. We can still go as far down as, 470, or I'm sorry, 370. It's possible. Likely, no. After we crossed the 50% retracement line, the biggest retracement that I saw was 10% off of that cross. 10% off that cross is not very much. The average retracement off of that cross is a 5% retracement. Now, something to keep in mind here, I like playing with this with different formats. Here I'm going to put all even years. When you go all even years, you can see that August, look at that pump before end of July, beginning of August, and then a small retracement at the end of August. This small retracement at the end of August would begin at the end of this week. At the end of this upcoming week is when that retracement would come, and then a harder retracement in September and October. That's if you just go even years. Midterm election years and even years, it's kind of eerie how they all have this September October decline. Again, I do believe we'll have a decline at the end of September. I do believe we'll have a decline at the end of August through September, maybe all the way into October. But I don't believe we'll make new lows of the year anymore. I'm struggling to believe that. Some of the bearish reasons, if you look at the amount of stocks over the 50%, over the 50-day moving average, we are at one of the highest levels that we have seen in years on the amount of stocks over the 50-day moving average. This was a broad market rally. There was a lot of things rallying over the last 2 weeks, and not very many stocks pulled back. So the situation with that is there was a lot of people very, very bearish. The sentiment was very, very bearish. And as we started moving up, people started closing their down positions, switching to long positions, and it causes a lot of stocks, too many stocks, moving over their averages. So now what's going to happen is some sectors will outperform and some sectors will underperform. That doesn't mean the overall market will have to come down. And if it does, it doesn't have to come down very hard. It just means that now we're going to start picking and choosing the sectors that are going to bring this number back down to the baseline, somewhere around here, somewhere around the 50%. 81% of stocks over their 50-day moving average, that is very high. That's almost as high as the May of 2020 highs when everything was rallying. So it's for sure something to keep in mind of. The max pain for next Friday. Now you have to remember that the max pain rotates and changes and it changes throughout the week. But as of right now, for next Friday, we have max pain at 405. There's still a lot of very bearish positions. If all of these bears start closing their positions and going bull, we'll have a little bit more squeeze. But I don't see that as the likelihood. I see some of these really far away ones. Those are probably gambles where people are willing to lose their little bit of a gamble. But I do think that we will move closer towards the max pain. I don't think we'll finish right at max pain because this, again, will change as the week goes on. But of all the weeks where max pain is most accurate, it's the weeks where we have a monthly expiration. And we have monthly expirations this week. And when we have a monthly expiration, you could see on all of these that I marked right here, that when we have monthly expirations, we tend to signal the low of the month. It's not always. You could see here it's not the low of the month, but that's the low of the month. That's pretty close to the low month. Pretty close to the low of the month. Low of the month. Low of the month. Pretty close to the low of the month. There's a lot of extra volatility on the monthly expiration weeks, and it's not generally to the upside. This upcoming week is monthly expirations. We are expecting some volatility, and me personally, I am expecting some volatility. Probably start the week to the upside and end the week to the downside. Some of the things that lead me to believe that, if you look at the McClellan oscillator, it doesn't often get to these levels. It's over 40 right now. The last time that it got that high, that I mentioned it on these videos, it cooled down a little bit as the S&P didn't continue to go up. As the S&P did not continue to go up, it went sideways. Like I said, of the 10 trading days in August, only 4 have been green, and two out of 3 of the last 3 days were green. So of the first 8 trading days, we only had 6 green days. Apologize. Of the first 8 trading days, we only had 2 green days, and that cooled off the McClellan oscillator. But you could see over here at the end of May, when the McClellan oscillator was at the same levels that we're at right now, we had June. We had this big retracement. Am I expecting this big retracement right now? No. But it is a word of caution to me to respect my stop losses. If I play the downside, I will respect my stop losses and not hold being stubborn, thinking that the market has to go down. The market doesn't have to do anything. It's going to do what it's going to do. And what that is try to make as many of us feel like we don't know what we're doing. We do have that 50-day moving average or 50-period moving average on the weekly chart, the downtrending trend line, and all of it lines up with the 61.8 roughly retracement line. And there's your trend line right there. That trend line right there is going to prove to be a solid support or resistance line. I can't see, as angry as the bears are right now, I don't see them easily wanting to give up that position right there. What I think the likely scenario will be, and I am no magician, I don't have a crystal ball, but I think that is the likely scenario right there. And you've heard me say before, time is sometimes more important than price. This is one of those situations. When you look at the cloud structure of the weekly charts of the S&P 500, there is a dip on the chart. The clouds, we are at the very top of the cloud right now, and the cloud curves up and then it goes like this. Well, that's just giving us, it's going to bite time so that when we get to this peak right here, right to the trend line, the cloud actually curves up and will probably move up to meet that cloud and then break into a bull run. That's what I see as the likely scenario. But it doesn't matter what I want. What matters is that we understand resistance and support lines, and then we react accordingly so that we don't lose the valuable assets that we have in the market right now. Currently, we are sitting at that 427 line, and the next level of resistance that I see is up here at the 433.12 line. That 433.12 line is based on the VIX closing at 1953. VIX closing at 1953 gives us a top risk level of 433.12 and a lower risk level of 421.08. So once we get to that 421.08 level, that's when I would start going long. Once we get to that 433.12 level, that's when I'll start going short. Now, of course, in this market, I keep saying I'm probably not going to hold these long and short positions overnight. This, to me, is a good time. This is a good place in the market where if I see a retracement back down to 421.08, I'm going to start selling puts at the 414.96 level. And if I pick up SPY at 414.96, I'm a very, very, very happy man. And that's just the way I'm going to play this volatility. Anytime I see a retracement, I'm going to sell puts. One of the things to remember, I saw this little cute chart on the internet this weekend, and I have been telling you guys that I have one account where every Monday I buy the same positions, same amount every single week, and this is the concept that I've been talking about right here. If you stayed in cash and nothing but cash, and you put $2,000 into the market between the years of 2001 and 2020, Assuming that you got a small interest rate at a bank at a savings account, you'd end up with 44,438. If you just had bad timing when you put $2,000 into the market and you buy at the market top every single time, you'd have 121,171. Look at the difference between if you stayed in cash and if you just had the worst, absolute worst timing every single year when you put in your $2,000. Now, what I said I've been doing is every Monday I put in the same amount. So that would be this example right here. And currently this is my best performing account. It's actually outperforming the perfect timing account because I don't have perfect timing. I've never had perfect timing. I don't have a single account that has perfect timing. I do have the dollar cost average account where every single Monday I put the same amount of money in the same exact stocks, and it is the best performing account that I currently have right now. This account would be as if at the beginning of every year you put $2,000 into the account and say put it on SPY, you would have the second best performing outcome, slightly being beat by the perfect timing. The point I'm trying to make to you guys, if you're in this for the long run, if you're trying to set yourself up for your future, if you're trying to make sure that you have a good retirement, don't hold back right now. Don't be scared by these talks of recession. Don't be scared by the talks of this is the beginning of a long bear market. No, dollar cost average. Put $200 into your account every week. Put it on SPY, put it on Apple, put it on Microsoft, put it on the mega caps, and let that grow. Over the years, you will be a winner. Don't put it on speculative wheat stocks. Don't put it on speculative electric vehicle stocks. Put it on companies that have persevered. Put it on Walmart, Home Depot, FedEx, Microsoft, Apple, Google. If you buy those companies and you buy them every single week, 20 years from now, you'll more than have doubled your money, more than have tripled your money. You'll probably have 4 times your money as long as you continuously put the same amount every week or every month or every year. Hope this helps you out. Hope this helps you stay positive on the market. With all the things on the news, it could be it's very easy to be negative on the market. It's very easy to be distracted by the noise. But stay positive, stay calm, understand your trades, understand your entries, understand your exits. Are you trading or are you investing? If you're investing, just buy. If you're trading, look for your support and resistance lines. That's what you need to look for. And most importantly, if you have any questions, need any help, jump on that HaiKhuu Discord, ask any questions, ask me to analyze any stock on any index. I will gladly do it for you, share it for you, direct message me on the Discord, or I'll post it publicly for everybody to see, which I always think is the best way to go about it so that other people can give their opinions of the same stock. Please take the time to give us a thumbs up. I apologize for this being a long video, but I feel like there was a lot that needed to be said, and there was a lot of information that I felt would help you during your trading week. Have a great weekend. We will see you tomorrow. And remember, give us a thumbs up, share the video.